RPGL just ripped 133.15% to 642, my people. And that's not a stock move. That's the market drunk texting your name from a margin account through a megaphone made of pure bad decisions.
Yeah, and the market cap is 6.18 million. That's not a megaphone, Toro. That's a kid's toy walkie-talkie with one bar yelling from a basement that smells like regret.
I saw 642 and my brain went full game mode like, alright boss fight, dodge the halt, loot the spread. Then I remembered, I'm not the hero, I'm the liquidity.
It's Wednesday, February 25th, 2026, and we're hitting the most volatile names, how to survive extended gaps with VWAP tests, and the macro overlay AI leadership jitters, credit worry, and bond traders pricing rate cuts out into 2027.
Like and subscribe, or your next entry gets filled exactly on the top tick of the day, and you'll tell everyone it was a long-term investment thesis, while you delete the chart from your camera roll.
First trading tip disguised as comedy. If it gaps up triple digits, your first job is not to buy. Your first job is to find liquidity. If you can't exit clean, you don't have a trade. You have a diary entry titled Dear SEC. It started as a scalp.
Find liquidity? I can barely find my impulse control. Also, GRAN is up 123.20% to 212 with relative volume 1371.72. That's like the whole internet clocked in, brought snacks and started clicking.
GRAN's relative volume that extreme is usually a fresh attention shock news, promotion, or a float situation where even small market orders move price. Intraday, keep it simple. Treat it like a gap instrument, not an investment.
Attention shock is the altar, Orin. If GRAN opens, flushes, then reclaims VWAP with real volume stepping in, that's the sermon for a scalp long. If it rejects VWAP twice, that's the market saying no, beloved. Close the app and go touch grass.
Second tip. Dressed as a roast. Stop using market orders in thin names like it's a charity raffle. Use limits, or the spread will take your lunch, your rent, and leave you with a fill price you can't say out loud.
Okay, limits. But EDSA is up 96.82% to 151 on 97.98 million shares. That's liquid enough that my panic can get filled instantly, right?
EDSI's volume is the headline, nearly 100 million shares is real participation, and biotech can reprice violently on a catalyst or a positioning shift. With microcaps, the float can turn into a feedback loop fast.
Jet hears biotech and thinks it means buy and pray. It means the chart is a suspect until proven innocent. Watch the first hour. If it can't hold VWAP after the open volatility, it's a fade playground. Bring a helmet.
And if it does hold VWAP, you still don't marry it. You date it. Short coffee. Tight stop. No meeting the parents, especially not the offering.
Speaking of dating mistakes, EZRA is up 71.93% to 0.2908 with 251.51 million shares. That's my exact type. Cheap, fast, and emotionally unavailable, with a restraining order from fundamentals.
Sub-dollar with that kind of share count can be a liquidity trap. Fills feel easy, so you feel safe, but the spread and sudden rug moves can be brutal. Define levels, define risk, and accept that one more push is usually where accounts go to die.
Also, when it's sub a buck and ripping, size down. The share count will trick you into thinking you're a genius. You're not, you're just holding a bigger bag with more digits and less dignity.
ANPA up 92.20% to 1251. Higher price beast, cleaner for some, but don't get hypnotized by the number. The only holy metric is can you get out without praying or calling your bank.
CP up 81.78% to 1357, but the perf column says negative 41.58%, so it sprinted and still missed the bus. What is that, a dead cat doing parkour on a down escalator?
Exactly. Big intraday pop inside a larger drawdown can be short covering, positioning, or a relief bounce. Trader angle, respect the overhead supply. First clean VWAP reclaim might scalp, but failure at prior day levels is where fades can get paid.
Orin says overhead supply, and Jet hears ceiling. Yes, Jet, if it bonks the ceiling twice, stop headbutting it with your account like you're trying to unlock a secret level.
Macro check. Headlines say strong earnings, still can't push stocks past AI and credit worry. Translation. The suits are smiling, but their eyes are doing risk management, and their hands are hovering over reduced exposure.
And bond traders betting on Fed cuts spilling into 2027 is basically the market whispering, growth is okay, but something might be structurally slowing. That matters for AI multiples and credit spreads, especially with the Nvidia test looming over sentiment.
Wait, so we're bullish because cuts, but also scared because cuts. This is like my ex saying we're fine while quietly packing a suitcase and asking where the charger is.
Welcome to markets. Both can be true. Cuts can mean easing, or cuts can mean uh-oh. That's why you trade the tape, not your feelings. And your feelings are not liquid jet. They gap on no news.
And then you've got AI arms race drama, Anthropic dropping a hallmark safety pledge, Alibaba pushing low-cost AI coding tools. My people, that's competition tightening like a stop-loss in a flash crash. Suddenly everybody's long-term until it's not.
That's also why AI leadership can wobble. Policy, safety, and monetization are colliding with expectations. If credit worry rises, duration assets re-rate fast, and your high multiple winners can trade like momentum microcaps for a day.
Derailment. Speaking of safety pledges, I pledged to my doctor I'd stop caffeinating like a hummingbird. Then GRAN started moving, and I blacked out and woke up with a new hotkey layout and a limit order I don't remember placing.
Your doctor should short your espresso intake. Back to business. RPGL relative volume 45.82, attention plus thinness. If the first pullback can't build higher lows, the dip is just a trap with good marketing and bad fills.
Trap with good marketing, perfect. Another practical tip, if you're green on the day, stop trying to double it on the next candle. The market hears greed like a dinner bell, and you're the entree.
Quick journal nerd moment. Tag your notes with an ISO timestamp like February 17, 2026, when you review setups. It forces accountability. What was the plan? What was the execution? What was the emotional drift?
Fine, I'll timestamp my shame. Today, Wednesday, February 25th, 2026, I promised to respect VWAP, and then I betrayed VWAP like it keyed my car and took my fills in the divorce.
Tournament check, Warriors. The Wick, Division Elevator. Registration is open, and we're at 18 out of 200 spots. So yes, there's room, but don't wait for the stampede. I want to see the herd climb that leaderboard like it owes them money.
Register at dayrade.com. Entry is free with coupon code DAYRDTWK. Registration ends March 1st. So from today, that's 4 days remaining, and the tournament starts March 2nd, 5 days from now.
Session hours are 9:30 a.m. to 4 p.m. ET. Intraday only, and you must be flat by 4 p.m. ET. 3 strikes for being open past 4 and you're suspended. And if your cumulative P&L hits minus 1,000, you're removed. The rules are basically don't be a menace, don't be a hero, and definitely don't be jet at 3:59.
Daily executed trade required, so I can't place an unfilled limit order of destiny and call it participation. Got it. My ego is sweating like a microcap CEO on an earnings call.
Lightning round time, my people. Tomorrow, if it gaps and holds above VWAP after the first pullback, I'm looking for quick scalps into volume surges. If it loses VWAP and can't reclaim, I'm hunting the fade with tight risk.
GRAN. With that extreme relative volume, I'm expecting violent ranges. My plan is to trade only clean level-to-level moves, and if it fails multiple VWAP tests, I'd rather wait for a base than donate to chop.
EDSA, I'm watching for the open rip, then the inevitable I'm fine pullback. If it reclaims VWAP fast, I'll scalp with limits. If it wicks me twice, I'm out, because I can't afford a third lesson today.
Kazar, 251 million shares means it'll tempt every overtrader on earth. My call is a morning spike, then a midday liquidity vacuum that teaches patience through pain. Trade small, take base hits, and stop trying to hit a grand slam with a toothpick.